The week gone by was nothing short of a roller coaster ride for equity investors. From a 3% downtick in a single day to rallying 3% the next day, the Ukraine-Russia standoff in Eastern Europe resulted in wild swings on the bourses all through the week. Overall, the benchmark S&P BSE Sensex and the Nifty 50 closed with meager losses of 0.5% each after Russia reportedly withdrew some troops across the Ukrainian border. In the broader market, the BSE Mid-Cap Index fell 1.9%, while BSE Small-Cap Index shed 3.2%. However, what has emerged as a notable trend in the current month is that investors, globally and in India, are adopting a risk-off approach and are looking for strategies to minimize losses amid choppy markets. While Dow Jones has corrected 4% and Nasdaq has dropped 5% thus in February, the frontline S&P BSE Sensex and the Nifty 50 have gained around 0.25% and 0.2% respectively. Despite this, there are 9 stocks that gained between 15 and 20% in February. Of these 4 counters, Blue Star, RHI Magnesia India, Schneider Electric Infrastructure, and LG Equipment soared 20% during this period, data show. Let us go to Business Standard's Avdut Bakkar to understand the reason behind such massive outperformance by these stocks and if they have any upside left.
The current international situation could not have any negativity on these 9 stocks. These stocks list includes BSE, Blue Star, LG Equipment, RHI Magnesia, Schneider, and few others. The major reason for these stocks that they could perform better are the significant improvement in their chart setup. An improvement in candlestick formation, chart patterns, and aggression in volumes, gap-up situation entering into new territory have helped these 9 stocks to stay afloat in this current scenario. Stocks like RHI Magnesia, which claim a new all-time high, followed by stock like Blue Star, which claim a new 52 weeks, generated a positive sentiments among bulls. Similarly, BSE and Vedanta have built up on a robust candlestick formations that could help traders and investors to protect their support levels. Other stocks like one could say LG Equipment, which has seen a formation of higher high, higher low, a chart pattern that induces positivity among traders. In terms of Schneider, one could see a strong gap up supported by volumes, developing interest among the market participants.
This week, analysts expect volatility to continue in line with global peers as the geopolitical uncertainty, volatile crude oil prices, and monthly F&O expiry are likely to weigh on the market sentiment. Besides, there are hosts of other events lined up in the next few weeks in the form of the big-ticket LIC IPO, the assembly election, and the implementation of the new margin system, which will lend incremental volatility to the markets. We spoke to Ajit Mishra, VP Research at Religare Broking, to understand the market strategy for this week.
So this week we expect market to focus more on this prevailing geopolitical tension between Russia and Ukraine in absence of any major domestic event. And any news of de-escalation would definitely lift the market sentiment and help the index to inch higher. And in case of any negative surprise, the reaction would be equally severe. So keeping that in mind, plus we have the monthly expiry also, so that would add to the volatility. So keeping all in mind, it's prudent that one should stick with the hedge position and stick with the index majors instead of mid cap and small cap.
Meanwhile, Milind Muchala, who is executive director at Julius Baer, says these interim corrections can present a good opportunity to gradually build up on the equity exposure as we continue to believe that the earnings momentum will remain a key support for the market. Our preferred sectors include domestic cyclicals such as financials, industrials and infra, building, material and auto, while we would also be positively biased on consumption, especially discretionary, healthcare, IT on corrections, and select names on bottom-up basis. Technically, the 50-share Nifty is expected to move within 16,750 and 17,620 zone, with support placed at 16,920. The Sensex index, meanwhile, will seek support at 57,000 level and could trade in the range of 56,450 and 59,150.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.